USA tariffs and their impact on Canadian stocks. When the US imposes tariffs, it creates ripple effects across global markets, and Canada, as a major trading partner, feels these impacts directly. The most affected sectors are those heavily reliant on exports to the US, such as steel, aluminum, and agricultural products. Here's a breakdown of how these tariffs influence Canadian stocks. 1. Steel and aluminum. Tariffs on Canadian steel and aluminum exports to the US can significantly raise costs for Canadian companies, like ***, Stelco** or ArcelorMittal, that export these materials. 1. These higher costs could lead to reduced profits, which in turn can lower stock prices. 1. However, some Canadian steel companies might see growth by shifting to other markets outside the US or increasing domestic sales. 2. Agriculture. The Canadian agricultural sector is often caught in the middle of tariff battles. 2. For example, US tariffs on Canadian dairy or softwood lumber can reduce profits for Canadian farmers and timber producers, like Loblaw companies or Canfor, leading to stock declines. 2. But at the same time, US tariffs may push consumers to seek alternatives from Canada, boosting demand for certain Canadian products. 3. Technology and manufacturing. The manufacturing and technology sectors may also be impacted if tariffs cause higher material costs, affecting companies like Magna International or Shopify. 3. These companies might see profit margins shrink if they can't offset the added costs or pass them on to customers. 4. Currency fluctuations. Another impact of tariffs is the potential for currency shifts. 4. When the US imposes tariffs, it can cause fluctuations in the Canadian dollar, CAD. 4. A weaker CAD might help Canadian exports by making them more affordable for foreign buyers, which could benefit companies in other sectors, such as Bombardier or Suncor Energy. 5. Investor sentiment and market volatility. Overall, tariffs introduce uncertainty into the market. 5. Canadian investors might react by pulling back or adjusting their portfolios in response to potential supply chain disruptions or reduced demand. 5. This could lead to short-term market volatility, as stock prices might dip in the wake of new tariffs or threats of tariffs. 6. Opportunities amid challenges. While some industries face challenges, others can thrive. 6. For example, Canada's tech and clean energy sectors could benefit from global shifts towards sustainability, especially if US tariffs focus on traditional industries. 6. Companies in these sectors may see a rise in investments as investors look for growth outside of tariff-affected areas.